So the Republican tax plan is out. We got to figure it out now.
The Dan Yorke State of Mind program is brought to you in part by Lookout Rhode Island and Takeo Comfort Solutions.
You know, the tax situation is such a personal thing for all of us. It really is. You know, middle-class tax cuts and the discussion of the rich versus the middle class and whoever else you want to describe in this whole thing is, I think, interesting to most of us. But when it comes right down to it, you want to see what the components are and what does it mean to you. And I'm not exactly sure that we're in a place to do that, you know, in a lot of detail tonight. But the projection that it could be like a $1,200 help to most middle-class Americans is pretty fascinating. Defining middle-class Americans is a whole nother conversation that we'll talk with Economist John Friedman about tonight. It depends on who you read and what their own definitions are. Here's the headline from this afternoon. Republicans release the tax plan cutting corporate and middle-class taxes, so they say. At press time, here is the latest from CBS.
House Republicans have finally unveiled their long-awaited tax reform bill, which they say will cut taxes and create jobs. The GOP proposal reduces the number of tax brackets from 7 down to 4, but keeps the top tax bracket at 39.6% for top earners. The bill also aims to double the standard deduction from $12,000 to $24,000. The home mortgage interest deduction would stay in place. Americans will still be able to deduct their property taxes. However, the deduction for state and local taxes would go away. But Republican leaders say they've come up with a solution for high-tax states like New York and California, who benefit more from these deductions than other states. Just getting to the point where they could unveil a plan has taken a lot of wrangling, but getting it passed is a whole other story that will involve even more backroom lobbying. Democrats say the plan is just another way for Republicans to push through tax cuts for the wealthiest Americans.
The priorities of the Ryan-McConnell bill have been clear from the start, perpetuating a catastrophic transfer of wealth from the middle class to corporations and the wealthy.
President Trump says he wants the bill passed before Thanksgiving.
Yeah, he wants a lot of things done on a timely basis, and so far health care hasn't made it, right, John? So
no, it has not.
We'll talk about that, and that's another part of the field of expertise that you bring. You are a guy who's been in the mix in Washington. You've seen the sausage being made here, right? So you understand at least some of the process. Maybe not in Trump world, but at least on the legislative side.
Well, I've seen some of the process, and I think if we thought that health care was complicated, tax reform is even more complicated because
the notion is that it's easier. Everyone thinks, at least it's been sold to us, that it's easier.
Well, so it's easier in the sense that everybody agrees that getting a big tax cut would be great. The problem is that in order to fund the various tax cuts that they've proposed, they've eliminated hundreds of smaller deductions, some of them larger deductions, and each of those has a particular constituency behind them that's now, for the next however long it takes, is going to lobby like crazy in order to keep their particular benefit.
Well, we should talk about the politics of this thing, I think, up front, because you make a really, really, really good point. Did you agree with my premise at the beginning that this is a very personal situation for most Americans, and most Americans are going to at least get what cursory information they can to see how this new format applies to them? Yes?
Absolutely.
Then, I'm not suggesting that I'm going to pick, I'm not calculable in this equation. You know, I opine for a living. I have a radio talk show. I have a television talk show. I make my point. Hopefully it carries. Maybe it resonates. I don't know. But do you think the average, and I don't mean average in terms of trying to diminish, just the working family out there can transfer, or how do they transfer their feedback as to whether they like this plan and it impacts Washington? Simply by calling the congressman? Is that really the method?
Well, you know, the congressmen don't spend all their time in Washington. They go home to their districts, and when they do, in the same way that there were an awful lot of ordinary citizens who were upset when they figured out that they were going to be potentially losing their health care plans, or they're going to be paying a lot more for their health care plans, here too, I think they're going to be hearing a lot from people. So, for instance, they're eliminating the student loan interest deduction. So if you pay student loan interest, which a lot of Americans do, you can no longer deduct that from your taxes. Now, whether in the grand scheme of things this is going to be offset by other
So
things.
that would be the up to 35, 37, 38-year-old, more or less.
I mean, it depends. Yeah, I mean, a lot of people borrow a lot of money, especially if you go on to get a graduate degree. A lot of these loans accrue interest while you're in school, and so what might be a $20,000 loan when you started is up to a $50,000, $60,000 loan by the time you've graduated, and now you've got to repay that.
Right. So anyway, the feedback will be interesting. The idea that the president wants this done by Thanksgiving, well, he's been talking about quickly since he got out. Do you think that this thing will pass by Christmas?
I am betting that it will not pass before Christmas, and I think the reason is that they're going to start to get a lot of pushback, not just from the citizens who see their own benefits taken away, but from some of the lobby groups that really organize behind some of these deductions.
Who are the big lobby groups that will have an impact?
So I'll give you a great example. The National Home Builders Association had thought that it was going to replace the deduction for mortgage interest, which was going to be cut, with a similar, potentially larger tax credit, either for a new home or for interest, that would continue to support the purchasing of new homes. That's now not true. And so they came out very dramatically last week and they said, look, we were planning on putting millions of dollars behind this plan. We're now going to take all of that money and put it against this plan. So now think about all the local realtors, all of the local builders that are, spread around in all these districts.
All of whom will want a position on this show and others.
All of them will be calling their local congressman. All of them will be threatening to withhold contributions from them.
Well, just on the mortgage thing, let's talk about it, because I guess what we see now is a reduction from $1 million to $500,000 on the mortgage interest deduction.
That's right.
For new homes.
That's right.
If you have a $750,000 mortgage right now,
you get to keep it.
You get to keep it.
And they've also eliminated the mortgage interest deduction on secondary homes. So think about all those places
vacation homes
that people have vacation homes, like the mountains, the coasts, all those places. Now people are going to be upset because people aren't going to want to buy. It's not going to be as cheap for them to buy those vacation homes anymore.
And that's whether they're existing or brand new.
I believe the secondary residence deduction is immediately gone for everybody.
Now, does that impact the middle class? Well, answer that question. I mean, it seems to me that anybody with a mortgage over $500,000 is upper middle class at lowest.
So I think it varies a lot between locations. So,
sure.
Right, if you are living in Rhode Island, in Burrillville, then if you have a $500,000 mortgage, you'll probably have a pretty big house. If you're living in Manhattan, you don't get that much for a $500,000 condo.
Right.
And so I think a lot of what you're going to see, especially on the mortgage interest deduction, similarly on the state and local tax deduction, that's also now gone. They're replacing it with a partial deduction of property taxes. But people who live in high tax states are going to potentially see increases in their tax liability. And as we saw, Obama promised that everyone would get to keep their health plan. And in practice, it was more like 98% of people got to keep their health plan. But that was an awfully noisy 2%. And I think what we're going to see here, too, is that most middle-class families get a small tax cut. Some of them are going to get bigger tax cuts. And some of them who have a lot of deductions, they pay a lot of property tax, they pay a lot of state and local income tax, they have a relatively larger mortgage, maybe they have a lot of medical expenses, a lot of student loans. Those are the types of folks who are not going to see a tax cut and may even see tax increases here. And I'm guessing they're going to be a pretty noisy group of folks.
Yeah, and those who have tax preparation and can advance what they think is going to happen to them will speak quickly. It's really going to be the first return for most people who are going to figure out whether they got blessed or screwed in this deal.
Well, I think that's right, and I think that a lot of it is complicated enough that you're not going to exactly figure out where you are until that first return. But if you've had a lot of medical expenses and take the medical interest deduction, or medical expense deduction, that's now gone. And so if you got to deduct, $20,000 because you had a big medical expense last year, you'll not get that. And so that's right out of the bat, you don't have to calculate anything.
You think these tax changes are going to be effective for 2017 or 2018?
2018, probably.
Yeah, right.
Because they just don't have time to write all the new rules for 2017.
All right, so before we get into some of these nuances, and we will, define the middle class for me.
Well, it's a tricky concept, right? When the election in 2008, it was pretty much everyone up to $250,000. In the tax deal that President Obama struck with the Republicans in 2011. The middle class got up to more like $400,000, $450,000. Here, I haven't seen exactly how they're defining the middle class, but certainly it's including people who I think are pretty well off relative to the national distribution. Now, here's the thing. If you find someone who's earning $400,000, they probably don't have a whole lot of money lying around to pay more taxes. And so they feel like their budgets are tight, and they may well be, but I think that's just making these things harder. Like, everybody feels like they're kind of right on the limit. Nobody's excited about paying higher taxes.
No, and no one's excited about the geographic differences that exist in this plan, especially with these itemized deduction changes. We'll talk about that when we come back. Stay with us.
Our tax system is so complicated. Our tax system really ties our hands behind our back. So we need to clean up our tax code, simplify our tax code, and frankly, just lower our tax rates so that our businesses are more competitive with the rest of the world.
Speaker Paul Ryan, we're going to talk about the businesses here momentarily. Your quick assessment of the Republican tax plan, does it simplify things?
No.
I don't think so either. I mean, I put up, Jess, would you put up the individual tax notes here that John was good enough to construct for us? New income tax brackets, okay, those are lower except for the high end, correct? Except
so there was a 10% that's gone up to 12%.
Oh, right.
So 12% is kind of a combination of what was currently 10 and 15. Then 25% is going to include some people that are 25 and 28 at the moment. 35 is going to be a combination of people who are 33, 35, and 39. And then there's basically a millionaire's tax bracket at the top there.
Doubling the standard deduction from 12 to 24,000 helps.
Right. So I think the key thing is they're going to double the standard deduction, which means you have to write off less of this stuff line by line. So that actually does help simplify things. But then on the other hand, they're going to sweep out a lot of the stuff that you used to get to deduct, even if it used to be way more than 24,000. And that's, I think, where a lot of the differences we're going to see across who gets a big tax cut and who gets a smaller tax cut.
What else we got on the list there? Elimination of the,
right, so they're doubling the standard deduction, and then they're completely eliminating what they call the personal exemptions, where you get about another $4,000 a piece for every member in your family that you don't have to pay tax on. And so that, combined with doubling the standard deduction, is kind of a wash.
That's what it looks like to me.
So then there was a worry that people with more kids, because they got more exemptions, were going to have to pay more tax, and so then they included an expanded child tax credit to kind of help offset that a little bit. But honestly, I think most of the complication in the tax code comes from the fact that you might be eligible for this thing, you might be eligible for that thing, you get this rate, but only if you're in this circumstance, in which case you get that other rate. And here they've eliminated a bunch of that. So for instance, the alternative minimum tax is gone. That's going to make things a lot simpler. But now they've got all sorts of features like you can declare yourself to be a small business. And that's another way to declare a lot of your income at a lower tax rate. They've got all sorts of provisions now that are going to disappear after 5 years. And so then you got to think about, well, are they actually going to disappear over 5 years, or is Congress going to extend them?
That's typically known as sunset.
That's right.
So what will go away?
So there are two main things that are going to go away. So first of all, on the individual side, there's this new family tax credit to kind of help make fewer losers in the middle class. That's going to disappear after 5 years. On the corporate side,
does that cover the loss of deduction for each one of the kids?
It helps. I think it helps it helps create fewer losers in the middle class.
Okay.
On the corporate side, they've had a big rate cut from 35 down to 20%. That's permanent. But then they're also going to allow you to immediately write off any investment that you make, but only for the first 5 years. And so, plus they're going to not tax you on any foreign profits. And so this is going to generate a lot of gaming on the corporate side to figure out what you can get into those first 5 years, what type of effects you'll have beyond that. Honestly, they've focused on the individual side, but really where most of the money is going in this tax plan is on the corporate side. We've seen a big corporate tax cut rate cut. We've also seen big cuts to the pass-through businesses. That's a partnership or something like that, rate cut from being taxed as ordinary income down to 25%. And the businesses no longer have to pay tax on foreign earnings. So you put all that together, I think the real question is who do you think is going to benefit from the fact that all these companies have to pay much less tax than they used to? Now,
Well,
the administration claims it'll be the ordinary worker. I think most people who are in the know, and if you just say it out loud to yourself, I think that's a little bit ridiculous. I think most of this money is going to go to the quite wealthy.
Well, this is fascinating. When it comes to individual taxation, isn't it true that 70% of the taxpayers in this country, I should say 30 to 40% of the taxpayers in this country are paying the bulk of the revenues to the government?
That's right.
So it's kind of hard, and inside the group that's not paying a lot of revenue are defined middle class people. So tax cuts for the middle class probably is a misnomer, or we have to redefine the middle class. I mean, people who are making $75,000, $80,000, $90,000 a year might get a skosh of help here, but the low six-figure earners are probably I'm not so sure about these deduction thing. People who are making less than $60,000 a year probably aren't affected because they're really not making a lot of tax payments anyway.
Well, that's an interesting point. So they don't make many income tax payments, but often they do pay a lot in payroll taxes. That's how most lower-income individuals pay a lot of tax.
Right.
So every dollar that you earn, eventually in Social Security, but whether you think that they're going to get the full benefits that are promised to them, given that we're going to run out of money 20 years from now.
I'm even talking about the individual return. I mean, a lot of people in that earning category, look forward to their refunds. So it'll be really fascinating after all this math works out to see who after the April 15th, I guess 19. Right? We'll be looking back on 18 performance and wonder whether or not they did better.
No, sure, but I think the point you get at is how do we scale the tax cuts that we give each person, right? So there's some people, you're right, that don't pay many income taxes. So any small amount of change in how much tax they owe could be if I owe $100 in taxes and you cut my taxes by $20, that's a 20% tax cut, but you only gave me $20. And so I think the better way to scale this stuff is relative to your post-tax income. Of the money that I actually get to spend on stuff that I want after having paid tax, who's getting what and how is that changing? Because I think that's how we should think about this. The government is going to collect about $1.5 trillion fewer dollars of revenue over the next 10 years. And in exchange, we're going to give that out to people. Who are we giving that out to, and what increases in their income?
And are they going to spend it so that the revenues come back into the Treasury?
Well, no. This includes the fact that some of the tax cuts will be spent and come back. So this is just
I've heard other congressmen in various interviews suggest that any one of those hits to the Treasury that's planned over the next 10 years is going to come back in spades, and that there's going to be a net positive cash flow to the government.
And I think, so I think that, right, surely there will be some increase in investment, but what we're also going to see is big increase in deficits. And so I actually think this is something that we really don't understand that well, but I think there's a real question, not of how large the impact on growth will be, but just whether it will be an increase or a decrease in growth from this. Right? On the one hand, businesses do face a lower tax rate and they can invest more, but on the other hand, there's going to be a big increase in the debt that we've seen in the government, and that's going to suck out investment dollars because they're going to be borrowing and pushing up borrowing rates for businesses.
All right, when we come back, we'll have the final thoughts from John. He's loaded on this one. But how can you project right now how this is going to turn out for you if it passes as is? Stay with us. We've talked about this before. Before I get to where this is going to go, I confused myself during the break. Is there a way, other than calling your accountant, that most people, not everyone has, most people don't have accountants, who can figure out what their input ought to be to the legislators about whether this is something that they want to see happen?
Yeah, so I'm sure somebody will set up a website where you can plug in your stuff pretty soon. But I think the main thing is you want to ask whether you are somebody who has a lot of deductions. So do you pay a lot in home mortgage interest? Do you pay a lot in state and local taxes? Most people, even today, don't list that stuff separately because they just take the standard deduction and forget about it. About 85% of people are like that. And so the people who are really going to be affected by this are the people who are in that 15% that currently itemize.
One thing I forgot to mention that I'm relieved over, I mean, there was a suggestion early on, a couple of weeks ago, that they would cap 401k contributions, at least pre-tax, to $2,400. They let that go, and it's staying at $18,000 and then up to $24,000 for old geezers like me.
So this is actually a great example of something that sounded like a real change, but in fact was just a gimmick. So they weren't going to eliminate 401ks. What they were going to do is force you to put it in a Roth IRA and increase the limits a lot over there. The key difference is that the Roth IRAs, you have to pay the tax now,
right,
no tax later. 401ks, you pay no tax now and tax later. Roughly, it's a wash for most people, except from an accounting perspective, the government collects a lot more revenue in the short run, which allows them to make a lot larger tax cut fit within the caps. That was the real thing that was going on there.
So they were going to extend the income maximum limits for the Roth.
For the Roths, in exchange for the 401ks.
So just flipping pre and post tax deductions.
Exactly.
Anyway, status quo on that right now, which is fascinating. Seems to me that there are going to be a lot of people trying to figure out how to become a company.
I think so. We now have a 25% tax rate on all these small companies, and there's almost no limits on who can become a small company. And so I think we're going to be seeing a lot of the same thing where you used to be an independent contractor, and now suddenly I'm John Friedman LLC, and poof, I can lower my tax rate by tax bill by a couple $1,000s.
And there's no real policing guidelines in this?
Nope. It's really, they're just going to say you have to, there's some general guidelines about how to do some accounting, and other than that, there's going to be very hard.
Will companies, actually small and mid-sized companies, or even large companies, find a way to legitimize discharging the definition of their employees to independent consultants and contractors?
Sure. We've already seen a huge increase in independent contractors over the recent year. I mean, think about...
But there are laws right now that guide independent contractors, right? You have to, if you're showing up doing the same task every day, there are restrictions on independent contracting.
Yes and no. I mean, it's just very, very difficult to police this stuff. There are independent contractors who show up every day and do the same thing, and yet they are paid as independent contractors. They don't get health benefits. They're treated in a separate
companies might seize
bracket.
that moment, right? So if they don't have to pay health benefits and they're not paying, they're not taking care of FICA.
Well, I think that for some of that, if I'm getting $40,000 plus a health benefit, it's really like you're paying me $50,000.
Right.
And so I'm not going to let you put me into an independent contractor role and still pay me the same $40,000. I'm going to make you make up that as well.
And you don't want to swim around for a health care plan, which we didn't get to tonight, which of course is still Obamacare.
I think, you know, I was on this show about
you told me it wasn't going to happen
8 months ago, and I think we honestly have no better sense of what's going to happen now than we did then.
All right. Everybody clear? Excuse me. I don't know. Are you clear?
I am not.
Thumbs up, thumbs down.
I'd say it's a thumbs down because of the big impact on debt and the huge giveaways to the very rich.
Is that because you're a liberal?
No, it's because
you're a thinker.
I'm a thinker.
All right. Thanks, John. Phenomenal. Tell you what's up tomorrow night next. Big question is, do you give yourself a bunch of agita right now? Do you feedback when you think about the tax plan? Do you think about America first and you second? No. Come on, right? It'll be very interesting next 4 or 5 weeks as the Republicans try to ram this thing through and the Democrats are squealing all about being for the rich and not the middle class. Somehow we'll figure it out. The Milligan Teacher Award winner tomorrow night. She's wonderful. We've already met her. You'll like her. See you Friday.